Hello, I'm Simran Valecha, a finance geek and a self proclaimed foodie, and I've been investing in the private and public US stock market for over 6 years now. And I've made a lot of money for my clients and myself. Welcome back to my YouTube channel. In today's video, we're going to be talking about the new tariffs that the Biden administration have imposed on China and which companies are going to benefit from it. Make sure you watch the video till the very end because there are some multi-bagger stocks in there. So the Biden-Harris administration announced $6 billion for 33 clean manufacturing projects, including for steel and aluminium, including the first new primary aluminium smelter in 4 decades, made possible by the Bipartisan Infrastructure Law and the Inflation Reduction Act. These investments will make the United States one of the first nations in the world to convert clean hydrogen into clean steel, bolstering the US steel industry's competitiveness as the world's cleanest major steel producer. Some companies that are at the forefront of clean steel technology are ArcelorMittal. It's an established metals and mining industry leader with a unique offering of global scale, product diversity, and supply chain integration, backed by continuous innovation and a really strong balance sheet. With an established track record of consistent free cash flow generation, access to higher growth markets, and a commitment to low carbon steel making, the company is well positioned to deliver long-term sustainable value to stakeholders. They have R&D capabilities supporting smart carbon steel making technologies. They've increased their low carbon emission steel offerings through their XCarb branded products in response to the increased demand for low carbon solutions from major sectors such as automotive and construction. Sales of the XCarb product reached 229 kilotons in 2023 and are expected to more than double in 2024. X-Carb products have a carbon footprint of as low as 300 kilograms carbon dioxide per ton. Here's the plan the company has for their new X-Carb product range. They are also focusing on exploring steel's role in transition to net zero. Overall, the company has been doing well. Their EBITDA per ton increased by $35 a ton to $145 a ton in Q1 of 2024 versus Q4 of 2023, reflecting improved activity levels and higher selling prices, somewhat offset by higher raw material costs. North America contributed to 34% of their EBITDA and Brazil 19%. The second one on my list is Nucor. It's the largest and the most diversified steel and steel products producer in North America. As the largest recycler of any material in the Western Hemisphere, they are also one of the most sustainable manufacturers in North America. They just acquired Southwest Data Products, who have a long standing relationship with some of the largest data center developers. It also complements Nucor's existing racking abilities for warehouse space. They had solid financial performance with 1.5 million EBITDA in Q1 of 2024, 845 million net earnings, and $3.46 earnings per share. They also bought back shares worth $1 billion in Q1 of 2024 and paid $134 million in dividends. This means that the company is focused on growth and they think that their shares are undervalued. Good time for you to be getting in now. They had a 7% increase in shipments, higher realized pricing, and increased metal pricing in steel mill segment. And a modest decrease in shipments, higher pricing, margins in tube offset by lower pricing in joist and deck, metal buildings, and rebar fabrications in the steel product segment. Their earnings outlook does look lower for Q2 of 2024 compared to Q1, but they released this before the tariffs were announced, and the tariffs are going to be a game changer for these ESG companies. Vanguard is also the company's largest shareholder with 12% shares outstanding, and you need to be investing in this company right away. The next one on my list is Cleveland Cliffs. It's the largest flat roll steel producer in North America. The company is vertically integrated from mined raw materials, direct reduced iron, and ferrous scrap to primary steel making and downstream finishing, stamping, tooling, and tubing. They are also leading the way in decarbonization. Two projects were selected for award negotiations in Ohio and Pennsylvania. They had near zero GHG emissions with green hydrogen and clean electrical power source. They're expected to significantly reduce their production costs, and this allows Cliff to maintain or even improve their high quality grades of steel produced. They have a net capital outlay, but it's going to be funded solely through their free cash flow and liquidity on hand. In Middletown Works, an integrated steel operation with carbon steel melting, casting, HT and cold rolling and finishing operations, they replaced the blast furnace with state-of-the-art DRI EMF structure, which led to lower carbon emissions and $450 million in annual cost savings. Similarly, in Butler Works, they will be saving $80 million in annual cost savings by replacing two existing natural gas fired slab reheat furnaces with four electrified induction slab reheat furnaces. In terms of numbers, they had 70% adjusted EBITDA growth year over year and 48% growth quarter over quarter. They also retired all remaining secured notes. Q1 2024 automotive shipments exceeded that of Q4 2023. Their US light vehicle sales is expected to exceed 16 million units in 2024. They announced a share repurchase program for $1.5 billion, which is a great sign. For the first quarter of 2024, the company recorded a net loss of $53 million or 14 cents per diluted share, with an adjusted net income of $87 million or 18 cents per diluted share. Included in the results were charges and losses totaling $202 million related to the indefinite idle of the Worldteen tin plate facility and loss on extinguishment of debt. This compares to Q4 of 2023, wherein they had a net loss of $139 million or 31 cents per diluted share, with an adjusted net loss of $25 million or 5 cents per diluted share. So honestly, all these companies didn't do that great previously in the last quarter because they were beaten by their competition from China. But now that these tariffs are in place, these companies are going to have a real turnaround story. Now, there was a second part to the tariff as well. The tariff rate on electric vehicles under Section 301 increased from 25% to 100% in 2024. The tariff rate on lithium-ion EV batteries will increase from 7.5% to 25% in 2024, while the tariff rates on lithium-ion non-EV batteries will increase from 7.5% to 25% in 2026. The tariff rate on battery parts will increase from 7.5% to 25% in 2024. Now, here are some of the companies that will benefit from this. Albemarle Corporation, ALB is their ticker. They serve both people and the planet honestly by transforming essential resources into critical ingredients for modern life. They provide critical ingredients for mobility, energy, connectivity, and health. They're capitalizing on tremendous growth opportunities in electric vehicles and beyond mobility, energy, connectivity, and health, like I mentioned earlier. They've been allocating capital to the highest return opportunities in sustainability and productivity, and they've been consistently achieving returns about 2x of their WACC target. They are market research driven, have strong IP positions, and have expanded application capabilities in targeted areas. They're maintaining the company's lithium leadership as the growth continues to accelerate by accelerating their global expansion plans to address future gap in lithium supply with 3.7 MMT demand expected by 2030. And they're innovating their mine to market with differentiating technology in 40 resource extraction, conversion, and derivatization. They are also increasing their lithium market demand outlook by 5x by 2030. They're leveraging their low cost resources as projects trend towards higher cost. Their low grade, high cost projects are required to fill the growing demand gap. The company aims to triple lithium conversion capacity by 2030. Their lithium specialties integration is expected to bring new synergistic programs for the company, and they entered into a definitive agreement with BMW to deliver battery-grade lithium to help the automaker pursue high-performance premium electric vehicles. This multi-year agreement, which takes effect in 2025, is one of the company's largest ever globally by volume and value. They had Q1 2024 net sales of $1.4 billion with adjusted EBITDA of $291 million, driven mainly by energy storage volume growth. They conducted successful bidding events for spodumene concentrate and lithium carbonate designed to promote price transparency and discovery. Their board of directors also declared a quarterly dividend of $0.4 per share on February 22, 2024, which was paid on April 1, 2024 to common shareholders of record at the close of business as of March 15, 2024. The second one in this sector is Enersys. It's a global leader in stored energy solutions for the industrial applications. They complement the extensive line of motive power, reserve power, and specialty batteries with a full range of integrated services and systems. One of their plants, Greenville, South Carolina, was selected as a potential lithium cell factory location, and they secured $200 million in short and long term incentives. They also acquired Brentronics, expanding their presence in critical defense applications, including small and large format lithium batteries and charging solutions. In terms of numbers, they had an adjusted gross margin of 28% in Q4 of 2024, up 310 bips and 530 bips year on year, respectively. Financials are looking good. The company is focused towards growing their lithium business, and the price has been the same since a year now. So, if you believe that EVs are the future of the world and you believe that Biden's tariffs will lead to improvement in the US lithium battery making businesses, then these companies are going to be winners. But of course, you gotta invest in it now and wait for the long run. There's another Chilean company called Sociedad Química y Mineral de Chile, or SQM, which does manufacture lithium as well, but 75% of their demand was coming from China. So we need to see how this one pans out. But if you're a risk taker, the prices have fallen recently, but because they have a lot of capacity to produce, they will be looking for buyers in the US. And if they can secure these buyers, this one's a real winner. There were two additional parts of the tariffs. One, the tariff on solar cells, whether or not assembled into modules, will increase from 25% to 50% in 2024. The leader in this industry is First Solar. I've already bought into this. I hope you're buying into this one as well. And the next part was that the tariff rates on syringes and needles will increase from 0% to 50% in 2024. For certain personal protective equipment, PPE, including certain respirators and face masks, the tariffs will increase from 0 to 7.5% to 25% in 2024. The tariffs on rubber medical and surgical gloves will increase from 7.5% to 25% in 2026. And the leader in this segment is Becton Dickinson and Co. Make sure you check this one out as well. Before you buy these stocks and invest into the companies, make sure you're buying it at the right price and the right time by checking their RSI on tradingview.com. If you have any questions about the US stock market, ask me in the comment section, and don't forget to subscribe to my channel. Bye.